Welcome to the Killik & Co podcast for Friday the 23rd of October. This week has been quite a quiet week on the macro front, apart from the ECB press conference where Mario Draghi talked about re-examining the current stimulatory measures at the next meeting, which happens in December. In terms of the actual wording he used, he said that the ECB stood ready to alter the size, composition and duration of its QE program. This sent the euro down against the dollar, as we can see in this chart here, and also has provided a very strong boost to European equity markets at the end of the week. On the other side, we are in the middle of the Q3 earnings season in the US, and around 165 companies out of the S&P 500 have reported so far. In terms of how it's tracking relative to previous earnings seasons, well, if you look at sales, it's actually tracking with a higher level of negative surprises or misses, as we'd call them, than prior earnings seasons. However, if you look at earnings at EPS, you can see that it's pretty much in line with the last earnings season and better than the Q1 earnings season. The misses on the revenue side have probably got a lot to do with the impact of the stronger dollar. And on the earnings side, we're starting to see some impact as companies readjust their business models and operating cost levels in response to lower revenues. What we have seen this earnings season is quite large share price reactions to changes in company guidance, both positive and negative. So just looking now at some of the companies that we follow that have reported this week. So first of all, Amazon reported last night. It beat expectations. Very strong performance on the revenue side, with revenue growth continuing to accelerate, both in the North American operations and international operations. You can see in this chart how revenue growth has picked up, despite the Amazon model being far more mature than it was a few years ago. The performance in North America is particularly good when you consider that if you take out the media sales in North America, in other words, things like DVDs or streaming media, then the revenue growth in the electronics and general merchandise business has been around 35%. Amazon also has a very strong position in cloud computing with its business called Amazon Web Services, and here revenue growth continues to be very strong, and the business is very profitable. Microsoft also reported, beating expectations. People tend to think of Microsoft as predominantly a PC company, but over the past few years it's been significantly changing it to focus on enterprise customers and on moving away from merely selling packaged software to selling subscriptions. And if you look at this chart here, you can see how the enterprise profit is not only growing, but is also now a much bigger component of the business than the consumer and device profit. Microsoft does have a weak position at the moment in mobile computing, but with the launch of Windows 10 and several new devices, there is the optionality that it further improves this position. Google also reported much better results than expected. There, the focus has been on what's been happening in their advertising business, especially around the impact of mobile and video adverts on YouTube. And what we've seen in this report is we are seeing the rate of growth of advertising on its site starting to improve, and here you can see it picking up in the latest quarter. They also announced a $5 billion share buyback program, indicating that Google has now started to return cash to shareholders. Finally, TripAdvisor is a company we initiated on recently, as we believe it has a unique asset in terms of the reviews that it has in its database and that people use when planning trips. And it's moving to find ways of better monetizing these reviews. And it recently signed an agreement with the largest hotel bookings agent, bookings.com, to partnership in its online booking capabilities. And this had quite a big impact on the share price, with the share price moving up around 25% after the announcement. So we continue to like the story for its very strong play into the technological disruption of online travel. In terms of companies reporting next week, quite a few companies that we cover. The two that I'll speak to specifically are Apple, reporting on Tuesday, and also Volkswagen reporting on Wednesday. So just in terms of Apple, with Apple's results, there's going to be there'll probably be two areas where investors will focus most of their attention. The first will be on what's happening to iPhone revenues, given it's by far the most important product for Apple, and the latest versions of the iPhone 6S and 6S Plus have recently been launched. So people will be looking at the direction of where that line is going. The other important focus point will probably be what's happening in China, given that's becoming an increasingly important driver of Apple's growth, and you have had some other luxury product companies such as Burberry reporting weakness in China. Then moving on to VW, there we think the investors' focus is likely to be around the diesel emission scandal and not really that much around these results. Although VW has announced provisions for the diesel emission scandal, there is a high likelihood that further provisions may be needed to pay for costs of recall, potential legal fees and damages. And this whole situation is a pertinent reminder that sometimes things that seem almost unthinkable do actually occur. Thank you very much.